Good morning, ARMR Insiders. Welcome to the morning meeting. You're looking at a chart of the S&P. That's our swing strategy for SPXL. Trade 21 started 2 days ago. And we're going to get into what that means, how it affects the risk monitor, and how we're going to execute at the end of the week. Today, 3:30 is going to be very important for our risk decisions. Pen, piece of paper, you're on the trading desk, the morning meeting of a virtual hedge fund. So think of yourself as a portfolio manager, what investments you might want to make, how you want to manage your risk. Take what I share with you as perhaps guidance. This is what I'm doing personally, and for investors I run money for, your job is to figure out risk tolerance, goal, and then execute your strategy and be the smart money. Everything flows on this trading desk from our 10 algorithms that we have designed for the volatility of these 10 assets, from small cap to big cap, from Bitcoin to US Treasury bonds. We have these 10 algos, and together, when they're all singing the same tune, it dramatically increases the probability of our success if we trade in that direction, if we invest in that direction. Okay, so 21st of February, that symphony sounded god awful, and so risk monitor went red, and we've avoided the market collapse for a couple of months. Let's fast forward now to what's happening today, happening this week. Our first most sensitive algo for swing trading direction of the market is our S&P, and it looks like this. Trade number 21 began 2 days ago. Okay. Yesterday was a phenomenal follow through on trade 21. Part of the beauty here is that the way this strategy executes, the stop just went to break even. Yesterday's pop allows this algo to raise the stop to break even. If we go below the low of yesterday, trade's over. All right, so we have a position on here, our most sensitive, our most aggressive, and theoretically, worst case scenario, it's a break-even stop. If we use 2000, the year 2000, as a guide, after the 2-month collapse, market rallied all summer. Market rallied all summer. Let me show you what I'm looking at. Okay, this is just a look at the NASDAQ 100 in March of 2000. Okay, there's the 40% collapse in 2 months. It looks very similar to what we just went through. And then the market rallied for the rest of the summer. Okay, rallied for the rest of the summer. That's right in here, these blue lines. So it's not strange for us to see the market trying to put a base in here. The vol has been imploded, right? So those guys are done with their phosphorescent selling. And the news cycle's starting to turn. Last night, China talked about getting rid of some of their 125% tariffs on certain U.S. goods. Trump's talking about a whole bunch of deals that are going to be announced in the next 3 to 4 weeks. Deals with India, probably the first. Japan, South Korea. So you're going to start to get that news cycle. All of this comes together, and trade 21 starts. And if the close is strong today, it's very possible the risk monitor is not going to be red anymore. I'm not sure it'll be green yet, but it certainly won't be red anymore. So maybe we're at some type of a yellow color. Talking about caution, put some money to work. Let's see how it unfolds. Now, let me share with you how I'm managing my own capital. When I get to a signal like this and the risk monitor looks like it may change, I get aggressive. Okay? I get aggressive, because I'm executing a strategy. If you're going to join me here on this strategy, I want you to understand a couple things. This is not, number one, a crystal ball. This is a probability algorithm. It gets us on the right side of probabilities when rewards worth risk. So if risk monitor goes green and you see me aggressively long by the end of this week, it's not a guarantee the market's going up. I could lose money. The most dangerous period of any new risk on cycle, let's be honest, what we're trying to do, we're trying to get on the wave of momentum early. We don't want to be chasers. We want to get on it early. Okay? I'm going to let everybody else mark up the portfolio. But if we're going to do that, the most dangerous period is the first 5 days of a new risk on cycle. Historically, looking at the risk monitor, the greens that fail in the first 5 days. There's two schools of thought. You can wait to the end of 5 days and see if the risk monitor is still green. If it is, usually it's a high probability the market's going up. We're on a momentum move. For me, I like to get my capital on as close to the stop as possible. I don't like to pay up for it 5 days. I'm willing to take the risk. So you're going to see my personal portfolio. I'm going to share with you in a minute, family office, how I'm running my capital. And then I'm going to share with you how I'm running the flagship fund. It's a little bit different, a little more conservative. And then it's your job to figure out your risk tolerance, what you're trying to do, and execute that strategy. Okay? But I like to get my capital to work as soon as possible, closest to the stop. I'm willing to accept the fact the market could crater today and I have to sell everything I added yesterday. That's just the way I'm built. I leave my ego at the door over here. I don't care. It's not a question of am I right or wrong. That's not the question that should be in anybody's head right now. That's ego. And that makes execution very difficult. All I'm asking myself is, do I have the probabilities in my favor? Is the reward worth the risk? Then I want to execute my strategy. And I'm willing to live with the results. How do you figure out position size, which is the absolute key to success in running money at this stage for sure, and probably at every stage, but at this stage for sure. And I'm going to tell you right now how to do it. It's not hard. It's very easy. If you decide to commit capital this week, do the math on a piece of paper, figure out how much capital you've committed and what the risk is to the stop. If it hits that stop, you have to sell. How much money will you lose? If you look at the number you've written on paper and it makes you want to throw up, that's too much risk for you. Reduce your position size to the level where you can accept that risk. Yeah, okay. If I lose that money, I get it. I can handle that. That's your position size. Now I'm going to show you how I'm going to put that 30% to work. I'd probably increase the group ETFs and indexes I already have in there. So maybe more S&P, more momentum, more bug. And then I'm going to finish it off with this asset. This is going to blow your head off, I think. What? He's going to buy a Kathy Wood fund? After all of the fun I make of her, I've been making fun of her forever. But I really like the top 10 names in her portfolio right now. I really do. And I believe in the flagship fund. As I've already described, I don't want individual stock risk. And I also don't want individual stock risk because if I have to exit this market, if I go risk on green today, and next week, the first 5 days of risk on green are the most dangerous, we hit our stop. I don't want to have to take 10 stocks out of my portfolio. The execution risk on that is going to be brutal. I just want 4. S&P, momentum, bug, ARK. That's how I intend to execute for the flagship fund. 4 equity ETFs to capture the upside in the market, balanced with precious metals, Bitcoin, and a couple of my dividend stocks. Now let's go over what are the positions that I added to the ARMR Innovative Growth portfolio yesterday. Well, I already told you here, Roblox I added yesterday. I added Palantir yesterday. We already own Coinbase. We added that a couple days ago. I added my favorite Doximity yesterday. We added, oh, I forgot, CrowdStrike. CrowdStrike is another name that's in ARK. CrowdStrike is also in the Momentum Fund. Wait a minute. Sorry. CrowdStrike is in the Momentum Fund. My mistake. Not in ARK. Okay. So CrowdStrike is one of the top names in the Momentum Fund, MTUM. I added, what else did I add? Oh, I added some Uber to the portfolio. All right. So we've got 5 new names in the portfolio. I will be heavily focused on the desk today in hedging the risk that I'm putting out. And I'll explain that to ARMR Insiders when we get started at 9:30. All right. Everybody have a wonderful trading session. Remember, be the smart money. Have a great end of the week.